Yeah, Tim Crossley, Managing Director, Adyton Resources. Adyton's a copper gold explorer focused in Papua New Guinea.
Tim, good to have you on board. And we spoke to your predecessor, Frank Terranova, back in November. Thought we'd time to catch up and see how things are getting on. Difficult markets, obviously. Is the plan still the same?
To a certain extent, yes. I think in terms of the sort of execution of the plan, we're probably looking at things a little bit differently. You know, after sort of, I guess, having a chat to a few of the investors, shareholders, you know, I guess it's probably difficult for a company like Adyton with its endowment of resource opportunities to try and do everything with that endowment. So I think the change in focus for us is to narrow down, hone in on two prospects, one being the Fergusson Island assets, at surface mineralisation, really good grades, very good access, near-term opportunity for cash flow. And the second key focus area being Feni Island, which is really the opportunity there is a genuine tier one copper gold asset. I mean, there's plenty of gold being identified and discovered there, but through our last drill program, we also identified, significant. We had a significant copper intercept. So I guess to summarise, that's our key focus, and our view is that Feni is probably not a project to be developed from now to sort of development by junior. So I guess the change in strategy is that we're looking to try and find a JV partner to help develop the Feni project, whereas we are more than comfortable with developing the Fergusson Island assets through our own balance sheet and through our own shareholders.
Right. Okay. So you guys, actually, do me a favour. Can you, given I spoke to someone else last time round, I mean, what's your story? What's your track record, history relevant to what you're trying to do here?
Yeah. So my background, I'm a I guess an operator out of the bulk space. Worked for BHP for about 15 years, developed a met coal mine in the Bowen Basin, operated their manganese operation in the Gulf of Carpentaria for 4 years, and then operated BHP Iron Ore before moving into the junior space. I've been operating as an executive director for Maya Resources, who is Adyton's largest shareholder, since 2015, which has really been focused on PNG. In that time frame, we've taken projects from effectively discovery to being fully permitted in PNG. We've taken two projects from that, origination, you might call it, exploration, feasibility, and then full mining lease environment permit. We've done that with two projects in PNG.
In PNG, okay, so that is highly relevant. So I appreciate that. And have any of the other former team moved on, or is it the same team, or have you brought others in?
Yeah, so our chief geologist is still with us, Rod, and CFO Stephen. Typically, the sort of field guys will bring in on an as-needs basis. So the guys that ran the program under Frank are still available to us, but we also have other. We've put on a slightly more PNG-centric board. Tony Williamson joined the board, really long-time experienced guy, used to run the MRA, knows all the people in the Mineral Resources department. So I'm going to leverage his skill set too when we move forward to execute our next program. And, of course, our chairman's a resident Papua New Guinean, Sinton Spence, been there for 20 plus years. So we have reshaped the board to have a lot more PNG centric experience. At the end of the day, that's where our business is. That's where our assets are. Okay, so let's break this up, because you're today $5 million company. Everyone's been hit hard, so I'm not going to dig you out about that particularly, but you're going to be cash constrained. I get that you raised some money in December. You timed it beautifully, $4 million, but you've got two projects. One you want to format, another thing you can get into early, cash flow from. I think I've talked previously about $100,000 capex, as low as that. But what do you think we should be? What are you focused on? What's important to you? Can you run both those things in parallel, or do you need to get focused on one? Oh, look, we're very much focused on financing the Fergusson Island assets. They're the assets that, in our view, can get you to cash flow the fastest. And in parallel to that, we're we're actively engaging and having discussions with potential JV partners for the Feni project. So that's how we're splitting up the sort of work, the workload. And, as I said probably earlier, we've come to the conclusion to try and finance and develop both those projects as a junior, it would be very difficult and would certainly stress our balance sheet. So our focus is really around getting the next phase of development on the Fergusson Island assets, while in parallel looking to find the right JV partner to partner with us on Feni.
Right, but I'm interested in the thinking here because Fergusson seems relatively low capex, and if you are talking about getting it a positive cash flow, well, again, give me an update. Has there been any development in terms of the ounces that you understand from both projects? Has there been any development in capex given inflationary pressures everywhere? Can you give us let's focus on Fergusson Island first, because where I want to go is, why would you not take the money that you may be able to generate from Fergusson Island to be able to advance Feni a little bit further down the curve and capture more of the value before bringing a partner with a big balance sheet in? That's the question.
It's a great question. Look, our assessment of things is that Fergusson Island is a project from today you could take to being shovel ready in 2 years' time. Assuming you can finance and fund it, you can get to shovel ready in 2 years' time. What does that look like? It looks like about a 6,000 metre RC drill program, a couple of thousand metres of diamond core, feasibility study, mining lease application, EL permit, bang, shovel ready. Now, what does success look like for us out of a program like that? What we want a shovel ready project that looks like a 70 to 90,000 ounce gold concentrate producer with about 2-to-1 silver credit. So you'd be looking up to about 150,000 ounces of silver. Very simple. So again, it's an island location. It's in a relatively remote but easy access location. So keep things simple. So what we're looking at, we're not going to try and make gold metal on the island. We want to produce a concentrate. So it's crush, grind, float, sell a concentrate to a smelter. That's our model. Keep it simple, keep the capex low. Now, you mentioned capital and inflation. There's no doubt that it's been there, and we haven't tried to re-look at the numbers, but based on some quotes that we received from some suppliers, I think that project can be built for between 60 and 80 million US dollars.
Okay. Which is, again, your market capitalization. I think your shareholders and others looking would be saying, well, how do you go about putting that finance packaging together? Okay, one, I guess you can say to me, as we advance things, the market will recover and we'll get credit for value attributed to us and make it a little bit easier, but it's still a big chunk of change, isn't it?
It is. If you didn't have belief that the market will ultimately re-rate you once you get your ounce count north of 1 million, you transfer, at least 500,000 in indicated into reserves, and looked at the valuation relativities once you've sort of de-risked those elements of it, it would be a struggle to raise that capital. I agree with you. But if you look at the sort of the value uplift that juniors are getting once they conclude those steps, finish feasibility studies, get mining lease permits granted, get environmental license granted, at least, I like to see at least the payback period plus 3 years in the indicated and then reserve category. You do all those steps, you should absolutely see a re-rate in your valuation.
But 1 million ounce projects these days, they're kind of quite common. I'm just trying to look at the finance market and sort of looking at various projects. 1 million ounce isn't a lot. Your grades are good and occasionally exceptional, but do you think the demands from the markets in terms of raising the capital that you're going to need are changing? Again, in the current environment, people are a little bit more risk on, as it were, rather than risk off. So, they are risk off. They're a bit nervous about what's going on. Precious metal markets aren't reacting like they used to in an economic environment like this. So, do you think you're going to need to actually potentially do a lot more drilling and maybe find a lot more answers before you can go to markets?
Personally, no, I don't think so, because you can then sort of overcapitalise the amount of drilling at this stage of the project. So, certainly once you're into cash flow, you would look to grow the resource. And look, how many projects have you seen out there across whatever commodity group that were a 10-year project or a 20-year project, and 25 or 30 years later they're still operating? Because you once you're in cash flow and you continue to explore and drill, you find more resources. The other thing about about Fergusson for us is we've got the Gamma deposit 30 kilometres away. We've got Wapolo, and then we've got another unexplored area nearby. So we look at Fergusson as a hub, build a centralised processing plant, most likely at Gamma, explore and exploit the resources there, move to Wapolo, and then move to the other parts of the island. Yeah, potentially you could be there for 30 or 40 years with that sort of hub and spoke model.
Yeah, okay, no, I get that. I'm just trying to understand how your approach to this. So then it's got to come down to the economics in terms of the studies. So what do you know now? What's the timing between now and you firming up on what you think the economics could genuinely be, given the current economic environment and given potential cost of money?
Yeah, look, at a really high level, we've done some numbers because we've done the MET test work. We know we can produce a concentrate from a float circuit. We, based on a release of a study by St Barbara on their Simberi sulphide project, there's some really good reference points on what the realised gold price will be for a concentrate, which is about 83% of the gold price. So do all those numbers, high level. I reckon we've got a project that can produce the gold and silver concentrate for under $650 an ounce, and at today's gold price, we'd be selling it for around about $1,450 to $1,500 an ounce, taking into consideration the discounts, the recoveries. The test work we did show we get about 86% recovery of the gold, which are all pretty good outcomes for us. So those high level numbers tell me we've got a really nice little gold project here, which will have low capex, but at the same time needs to be developed in a pragmatic, sensible, really cost-focused mindset. You can't gold plate this, right? And that's the way it should be developed. That's the way we all used to develop projects in the 90s, and that's where I come from. That's where my mindset comes from as well. So when you look at it that way, it's a 50 to 60 million EBITDA project every day of the week. You crunch the numbers on the back of an envelope, the numbers I just gave you, and it's a 50 to million EBITDA project every day of the week.
That's refreshingly honest about what you will capture, the value that you will capture in terms of the dilution, in terms of the recovery, etc. It's a realistic number. It's maybe something that the market isn't used to hearing, in the sense of most companies talk about the price of gold today. They don't talk about the dilutionary component and the net number. So in the same vein of honesty, if it is a 50 to 60 million EBITDA number, that's great. But it kind of reduces your options in terms of, where you go for this financing. So in terms of your experience in developing PNG projects, what are the types of funds or source of funds that you are going to have to go and talk to? It's clearly raising equity right now in any shape or form is going to be expensive on the equity portion. You don't want to go debt in the markets. Are there institutions that, like these sort of smaller, perfectly formed projects, will the debt, will the debt be comfortable for you in terms of, securities that you're going to have to give on that component? So how do you go about funding these things, given your experience? Yeah, look,
in terms of the funding for that sort of major capex piece, I think there's going to be a number of ways there. Firstly, like if you perhaps, maybe it's not a great example because that project's got on hold, but if you look at sort of our neighbouring island next door, which has the Woodlark project, Sprott was a big funder. There's gold streamers that at that stage of the project will certainly look at funding through prepayment streaming type instruments. And then there's obviously the ability to go back to your own shareholder base or institutional funders either out of North America or Australia for the equity piece. So I think it's going to be a combination of all of those. There's no doubt that we haven't at this stage, and you wouldn't normally at this stage have sort of worked out what sort of debt to equity ratios we'd be working on. But I'd certainly be looking at a combination of sort of streaming finance, some institutional money, and also looking back on our own shareholder base and probably new institution money that would come in at the point when it's de-risked. The other opportunity in PNG for financing is the Papua New Guinea superannuation funds. Now, they are flush with cash. They're looking for US-denominated earning projects to diversify their portfolios, which have typically been very focused around just property and buying bonds. So that's an untapped and very interesting opportunity for us. Typically the discussions we've had with them recently, they don't write a ticket less than 50 million kina, which is what, 20 million Aussie. So I think that's very fertile ground for us, but not now. They want to you need to have your project in that shovel ready, fully permitted, clear line of sight to cash flow. Then they'll be interested.
Right. Okay. So let's talk about the time frame between now and that moment in time. So because let's say this is I guess, like you say, I get that. Okay, so 175,000 ounce indicated, 340,000 inferred, right? So it's a small project, but as you say, these things, have a tendency to go on and on, past the life of, initial life of mine. You will spend more money on exploration. So that is fine. But to get people interested in these size funds, you need people who have done it before, who are comfortable with this thing. So between where you are today and getting it shovel ready so you can go and talk to the Papua New Guinea Superannuation Fund and others, what do you need to actually deliver, and how much is that going to cost you? Yeah,
well, I think a really good question. We certainly don't have the answers in the ground now. So the next phase of work, which is nominally a $3 million phase of work, would be focused on increasing the total resource inventory to around about 1.5 million ounces, with about 500,000 ounces in the indicated, which enables you to take that to reserve. That for us is important to get to that sort of scale. Anything over 1 million, I think, starts becoming interesting to people. Below 1 million is probably, I think you said it earlier, there's dozens of projects of that scale. We do have some serious advantages over a lot of projects in that our mineralisation is typically at surface, so it's shallow, and the grades are good, and the access to the site is really good. So your development costs will be relatively lower cost than certainly other projects in PNG that might be in the highlands or more difficult geographies. So I think in summary, to answer your question, the timeline is probably about 2 to 2.5 years, and the spend is circa $3 million to get you to that point where you've got, just going over it again, feasibility is completed, environment permit in place, mining lease in place, and you are in a sense shovel ready and in a position to now go to the market to fund the actual development and building of the project.
Okay, which then I guess, and let's park that up, which then kind of, I guess, answers the question as to, why you would want to look for a farm out opportunity with Feni Island, because that's 2 years into the distance, and then you've got how was the build time on a small project like that would be, what, 18 months?
Oh, I think you'd be able to do it for a bit less, but sort of 12 to 18 months.
12 to 18 months, right. Okay. So you're 3 years away from, starting to ramp up the revenue there, and I guess 4 years away from being optimized. So therefore, a conversation around Feni Island, bringing someone else's balance sheet on, getting, carried for whatever percent you can negotiate on something like that. Should we go talk about Feni Island? Because it's not just gold, it's copper as well, isn't it?
Yeah, look, there is an argument to say, well, just stick to minimum expenditure on Feni, put all the efforts and focus on getting into cash flow, and then recycle those cash flows into Feni. Mm-hmm. Look, I think that is an option, but I do have a view that really, having been on Feni, understanding the sort of local landholders' expectations on things, I'm not sure that you'd still have their support if you'd sort of kept them in a care and maintenance type mode for another 2.5 to 3 years. To be honest, I think we need to show some more demonstrable type of activity on Feni. And as I mentioned before, it's difficult for a company of our size to be able to running those projects in parallel, not only bandwidth, but also balance sheet capacity. So, on a fully risk-weighted basis, considering all those factors, shareholders, I think the most sensible way forward is to try and JV it and find the right partner to do that with, and hopefully do it at obviously good accretive valuation terms.
Right, and how much? What's your expectation as how much money needs to be spent on that? Because, like you say, whether it's 2, 3, or 4 years away of you kind of coasting and sort of then waiting for your own cash to come through, you could be 2 or 3 or 4 years ahead if you can find a partner now to kind of start the process and using their balance sheet and without the concerns or worries about dilution. So, what would you want a farming partner to do? How much money do they need to deploy? How quickly, given the size of the opportunity? And quite frankly, given the size of some of the other companies operating in the vicinity along trend, these are monster projects. So it probably deserves a monster spend, doesn't it?
It could be. I mean, and if it's a deep porphyry system, like as I said, Feni's just down the road, so to speak, from Lihir, which is a 60 million ounce project. Our first phase of work, which is really to try and sort of understand what's going on with copper, was about a $3 million program. That's not going to get you necessarily to shovel ready or anything. It might just identify that you've got to spend another $10 million because you've actually found this amazing resource and you want to drill it out. We've got a high level of target expectations to sort of identify a resource of circa 5 million ounces of gold and 1 million tonnes of in-ground copper. That's going to take more than a $3 million program. There's no doubt about that. And then when you consider the other aspects of Feni, it's quite hot ground. It's got definitely amazing geothermal potential, which is actually a plus and a negative. Once you build a mine and you've got the opportunity to build a geothermal power station like Lihir did, they built 60 megawatts. You've got 24/7 renewable energy for the life of the project. So great upside opportunity there. But I think in terms of really understanding what is it going to take to get from that next program to a sort of a shovel-ready state, I think the answer to that is I don't know until we're informed by that drill program and really understand what that's telling us.
Right. But so you're saying that the group that you would look to come in would need to have a decent balance sheet because you would look to them to spend the relevant amount of money. Anyway, between 3 initially, maybe 10 initially, but something to move this project. Because the big mistake that juniors make is they do these farm outs with inconsequential companies without the ability to raise money, which soon become cash constrained, and then it kind of limps back to its previous, run rate, i.e., not a lot happening. So I'm intrigued by this selection process that you would go through to find a farming partner, and not just to it'll do type decision making.
Yeah, I mean, you want someone that can follow their money, don't you? Someone that can only sort of bring 3 million to the table and get you to the next stage. Look, maybe you take it because it actually does take you to the next value accretion step. But ideally, you want someone that can follow their money right through to developing the project and being the project operator. We live in an imperfect world, so sometimes you don't find those partners at this stage of a project because it's a bit early for them and they want to get involved at a later stage. So you will, in a sense, compromise who that might be just to enable you to get to that next stage. So, yeah, I mean, in an ideal world, you'd want to find a tier 2 strategic partner who's in the game today, who loves the asset opportunity and can take it right through to full development. That would be the ideal world. Is that likely to be the partner we find right now? I'm not sure, but I mean, we're talking to people who find the geology extremely interesting, and whether they're interested enough to come in at this stage of the project, time will tell.
Right, but it makes a big difference to you, and makes a big difference to your shareholders that you do pick the right person. Because if you do negotiate, I don't know, a 25% carry through to feasibility study or production of a feasibility study or FID, whatever you can negotiate, there's a value to that. And what I'm trying to work out today is how to value you, right? Because the Fergusson Island stuff, obviously with Gameta and Wapolu, from humble beginnings, or from acorns, oak trees or grow, whatever you want to say about it, but it's not there yet. So, there at least are some numbers I can wrap my head around and value you. With Feni, if your capital is not going to advance that, I want to understand what capital is and how much of it there will be, and what kind of deal that you can construct, because I can again put a number on that in my head. Do you know what I mean? So it's a really important decision for you guys. And I want to feel that it's not a case of we'll take whatever is on offer, and we are, you go the extra yard to say, I'm going to create shareholder value by getting a meaningful company with a meaningful balance sheet or access to capital. That's what I was getting to. I just want to help.
I understand where you're going. I mean, in simple terms, it's too early to sort of necessarily try and put a value on what that project is, but you certainly you would. Our view is that you'll need to spend a minimum $3 million US to understand the size of the prize, particularly understand what's going on with the copper, and particularly understand, the strategy that Rod's got our geologists is to push into this unexplored area that's got some cover over it. Previous explorers have really looked at Feni as purely as a gold project. Well, why wouldn't you? It's just down the road from one of the greatest gold discoveries, being Lihir. A lot of it was very shallow drilling, air core, misguided. Probably a bunch of different explorers didn't really have a clear strategy. So we're trying to have a really clear strategy to understand, okay, well, we know there's gold here. It's not necessarily a dripping roast in terms of the grades of gold that we've found yet, but there's certainly a massive runs, 145 metres at 0.8 grams from surface. And we now know there's a very interesting copper story with that hole 4 that we had last year, where at 70 metres we intercepted 0.3% copper, 1.1 gram gold, and then 6 metres at 5.2% copper. That's a genuine intercept of interest on any stretch of the imagination, but it's way too early to try and sort of place a value or a project value on Feni. I think after the next campaign, and we really understand the gold resource, we understand the grades, and we can wrap an expanded inferred and potentially convert some of the gold into indicated, absolutely, bang, we could do a preliminary economic evaluation at that point and get some really good clear line of sight on the project value, which is sort of where we're at on the Fergusson assets. We're at that stage now. We can have a line of sight on value there, whereas you can't really have a line of sight yet on value. There's plenty of blue sky at Feni, but what is it? What can you really put your arms around? It's probably too early to tell.
Yeah, no, that's a fair comment. Honest comment. Right, you raised us $4 million in December. You've given us a sense of
No, we didn't raise $4 million in December. That capital raise was put on hold. Yeah.
Sorry.
Pending further.
So the headline. So what happened?
I guess it was put on hold because one, it wasn't really being supported by the major shareholders, and two, particularly from my perspective of being on the board, I wanted to understand a little bit more about the metallurgy, and we hadn't had a lot of those reports back in. So we didn't have any of the met test work back in. We hadn't had the petrography reports back in on Feni, and I think that was really important to be informed by that before making a decision about how you're going to go and spend, another $3 or $4 million.
Okay. So what was happening around there? Because there's that decision making happening. There was a whole bunch of people who tendered their resignations, etc. And I know like Frank's gone, but was there sort of like a re-evaluation at the time about the trajectory or the direction of the business? Was it kind of a little bit of a shakeout?
Yeah, look, it was a shakeout. I mean, I suppose you could call it that. I don't know whether that's a good choice of words or not. And probably a bit of a reevaluation on the strategy. I mean, at that time, the company, I think it was fair to say, was really pushing ahead with trying to finance the development of an ongoing exploration on both projects. Whereas, I think it was probably, let's sit back, let's reflect. We've just done a very aggressive year of exploration. We put, $6-7 million, maybe more into the ground, $8 million into the ground. Let's just get all that information back, understand what it's telling us before we make, the next decision to move forward. And I think part of the decision making that came out of that was the decision to not try and progress both Fergusson and the Feni assets together, but to focus on Fergusson and find a JV partner on Feni, and that's really where we're at now.
Okay. Again, nothing wrong with it. It just sometimes needs to happen. So there's always going to be disagreements, and I guess managing a tough thing because you're dealing with a lot of what ifs in terms of decision making rather than actual data. Okay, so that kind of happened then. So where are you with financing now? You've given us a sense of what this thing is going to cost for the next 2 years in this conversation. So you're going to need to go back to market again, aren't you?
Yeah, I mean, at some point we need to go back to the market, certainly to finance that program that I described before on Fergusson Island, which is largely focused on Gamma. But it will also have elements in it to understand, doing some geotechnical work, understanding what we're going to do with tailings management. So you're starting to really wrap your head around what's this project going to look like, getting an understanding of where plants might be located, et cetera, et cetera. So you're right, we do need to consider a capital raise, and I think we're starting to think about that and do some soft soundings. But at the same time, we're conscious that what's going on in the gold market. In your introduction, you spoke about, we haven't sort of seen the expected response in the precious metal sector that people were probably expecting to see with inflationary pressures and so forth. So, do we go now? Do we sit back and just assess markets? I'm not sure. We probably have a bit of a discussion at the board, not this week, but next week, to understand whether we're going to go now or sit back and just try and understand where the equity markets are at. It's not, let's be honest, it's not a great time to be trying to tap the market right now. It's, I've heard some people describe the sort of the junior end of the market in Australia as bad, if not worse, than post GFC. So, we've got to just balance all that together. But being also pretty conscious of the fact that Gamma and Wapolo look like pretty amazing projects. So what you don't want to really do is to just sit there and have them in care and maintenance and then have the markets respond and you've now lost 6 months. What would be great would be to get them advanced, get the exploration drill rigs back on there, get the feasibility study happening, so that when you've got that response in the markets, bang, you're ready to go to develop a project and build a project.
So how is the company at the moment? I know that, Maya Resources owns 43% of it, and I don't know what their financial position is, but, does Adyton have the ability to, wait things out and just, maybe reduce the speed at which it advances things? Can Maya Resources, are they in a position to lend money to the company? Does the company need it? I mean, what are the numbers looking like?
Well, I think to break the question up into probably two parts, have we got supportive shareholders who would support us in a sort of a low activity sort of holding pattern? Yes, we do. We're all shareholders. I'm a shareholder. Sinton Tony are all shareholders and we're supportive shareholders in that respect. Is Maya interested in maintaining its position on the register and not diluting if it's got the capacity? Absolutely, it is. So I think to answer your question, we probably, if you looked at our cash position today, you'd say, well, there's not much. There's not a huge amount of runway left. But if you say, well, okay, is that a problem? Not necessarily, because there's some very supportive shareholders, including the one that's talking to you now, that are happy to fund the project in a slowdown mode and then hit the button when it's the right time to hit the button.
Put it what, like loan or put equity in?
Oh, we could do a small placement. We could do a shareholder type loan. We're not at the position where we need to make that decision right now. The cash reserves are still, certainly okay. So it could be any one of the above options. Probably sort of a clean equity sort of private placement's probably the easiest way to go, or the cleanest way to go.
So that's a decision for you and the board in the next couple of weeks or so.
Correct. Yeah.
Okay.
Yeah.
Okay. Well, I'll leave it there. It's interesting. The strategy is interesting for sure, and it's been refreshingly honest conversation as well. So I do appreciate that always. But stay in touch. Let's see how you get on. Okay.
Yeah. No. Thanks very much. Thanks for having us on Crux. Yeah. First time for me, so I really appreciate the opportunity.
It's not as bad as they say, is it? Easy. Okay.
That's good. Thanks.
Thanks, Tim.